Hey guys, hello. It is the 20th of November. I'm Chris here with Elwave Cafe. Welcome to today's report. And let's take a look. The markets have sold off again, and pretty heavily this time. It's kind of the largest day we've had for the past several weeks. And this continues to show basically that in periods of high volatility and when you lose that 50-day moving average, the chances of declines continue to remain very high. So we were talking a little bit yesterday about Nvidia's earnings and kind of how positive they came, and if the market was able to hold this. I put this on Twitter that it looked like, especially if you looked like on a 1 hour or on a 4 hour chart, it looked like that reaction that Nvidia had wasn't a reaction that's going to it was unlikely that it was going to be sustained. And this is because Nvidia basically made a round trip. So it went all the way up to 215 or so to 12, and then it dropped back. So this is what created that kind of head formation back here. Then you had the left shoulder, and then the chances of it, based on this formation, the chances of it creating a right shoulder were pretty high, and I mean, giving that the benefit of the doubt would have been, kind of the right approach in my view, because of the structure that was right here. So assuming that it was just going to continue higher after you already had a major failure of the top, it just kind of went against the price that we've had prior to this rally, if I make any sense. So the fact that this looked like this up into this highs was, and you could also kind of feel that a lot of commentary around that people were excited about Nvidia's earnings, almost like he was going to try to kind of save the sell-off that we've been having in the markets and in Bitcoin, into a hope that the Nvidia would be the great market stabilizer, and it would create some kind of a rally, and kind of saved a lot of people from kind of having to close positions or hedge, or deal with some kind of a negative reaction in their account. But at the moment, I woke up this morning and I saw Nvidia sitting up there, and not being able to rally, because somewhat I was expecting it to see if it's going to have a bit more power overnight to continue to go and open with the gap higher. And then it kind of started to fade at the beginning of the session, and then I personally, I kind of started shorting heavily more when I saw kind of what Nvidia was reacting. And today was a decent day for the short side. Now I still have some long, so I was able to kind of hedge some of my positions there with some shorts. But this is basically not looking very healthy now. With Nvidia, you're below this 50-day moving average with the massive upside reversal, with the rejection from the higher prices. You have a big neckline here at about 178, and if this gives way, I mean, all you got to take is just a measure from, let's say, 180 to, let's call it 200, 210. There's 30 points, so you have a move that could go down all the way to 150 before this is kind of complete. And I was kind of comparing the price section here in Nvidia to the price section in Bitcoin prior to Bitcoin breaking down. So if you see the move higher and the reversal, so a failed breakout in Nvidia that just kind of turned, and then if you look at Bitcoin, it kind of did a similar thing, went up and then it reversed, and then we've been selling off for the past 1, 2, 3, 4, 5, like for about 6 weeks. Now we've been coming down and continuing to go, gaining traction. More traction actually, as soon as we lost this kind of 50-week moving average, the one that was kind of holding prices on the way higher. And now, if you've seen some of my videos yesterday, looking at the wave counts, that kind of fourth wave idea becomes more pronounced, with the fact that we're we lost that 61.8. We're getting close to 78.6 of this latest rally in Bitcoin, and the likelihood of it kind of going towards 75,000, it's increasing. I mean, look at this, right? These are just weekly time frames. I mean, we still have several days until this week closes, but even if I go and look at the daily time frames, this is it's just not a healthy price action. A couple of days ago we've had a little bit of a rally, but that kind of got rejected. We made a new low, we made another new low, and they're going to continue. I think you know. Whoever has the liquidity to short or to get out of positions, what have you, they're going to continue to try to make new lows. And if they're not able to even take the prior day's highs, right, that's a bit of a problem. And today this was an attempt that failed. So at the minimum, I would look for any sign of recovery at the previous day high if they're able to take that. And today's highs was at about 93,100. So if we're able to kind of get back above that one, then we could talk about a possible low, and then we can, look to see if we have further recovery or kind of how it looks, if it fails or not. But at the minimum, you want that. So far, you're trading at the lows of the candle. We'll see how we're going to close. You do having a bit of higher volume, but it doesn't feel yet that the crypto market has actually puked anything. It's still a pretty orderly decline in here below the 20, below the 50. Now you have a crossover between the 50 and the 200, the famous dead cross, what have you. I don't subscribe to those a lot, but you can kind of see how you have a lot of overhead supply on any rally. So Bitcoin would probably continue to struggle here for a while, and just kind of going back and looking at the weekly, eh, really there is not a lot of support until maybe up here at about 77. Let's say back in February, we've tried to kind of break below this level several times, just because they were pretty close to this zone. So you could say that 76.5 would be the first zone that would give some kind of a more solid 78,000, and then back to kind of 74. So it is what it is. There is just not much to do. I mean, from a longer term perspective, I don't have a problem with Bitcoin. It's fine, but from kind of an intermediate and shorter term swing trading type of a style, there's really nothing here, and I'm gonna continue to say that until the price shows a different type of behavior. And even in terms of the wave count, that structure, it just doesn't look complete, and it doesn't look like you've created a necessary declining sequence to assume that it's done. We'll see. Okay, so kind of really quickly back to the S&P, because here is what I think this is important. We're looking at the S&P 500 as a gauge of the market health. Now, you can be in different stocks. Some stocks, especially the high flyers, if the S&P loses 5%, those guys could lose 15, 20%, right? Because there's just so much more volatility there. What do you call it? Their beta and their ATR, it's much higher, and they will accelerate gains, as many of you know and probably enjoyed some of those gains into some of these kind of high flying stocks, but they also accelerate losses. So I continue to look at the S&P, and at the Nasdaq, obviously, sometimes at the Dow Jones and maybe even the Russell, as a gauge of the market health. What's happening with new highs versus new lows? What's happening, advances versus declines? But the number one, so that's all the breadth, which continues to deteriorate. But in terms of price, pure price action, this is not uptrending anymore in the way that it's been done before. So it lost a little bit of the character, and it needs to get back above this 50-day moving average in here, to above this 10-week, to trade with any confidence into the uptrend, and to kind of start to think about holding buys a little bit more. And you also want the VIX, which today it's gone all the way up to almost 23, and it's closing near the highs. It's in pretty high volume. until VIX comes back, it's very tough to trade in this high volatility because you can get whipsawed around. So from the perspective of being careful and not wanting to get burned, it's better to just kind of sit on the sideline and observe the price action. If you do have enough experience to look at some of these high flyers and take opportunity of shorting them against declining moving averages as a second wave or as a B wave, just know exactly where your stops are. That's kind of what the market is kind of telling us, right at the moment, and that is, as unpleasant as that is for the uptrend. We just have to deal with it. This, the idea of a three-wave setback, it's still in the back of my mind, but we're so close to these lows in here, and this is probably where we're going to find support, being a bit oversold. So I do expect probably tomorrow what's going to happen is we're probably going to go down, and it's actually better. It's better to open lower than to open up higher. When you open up higher before the market opens, usually, those are just opportunities, or they give chances to some of these larger traders maybe to get out of their positions or even short. But when you flush lower, pre-market, that it's actually better for the price action in terms of a reversal, because usually by lunchtime you can start to kind of turn back. So again, a very heavy close, a big reversal bar, a big bearish engulfing. Usually these types of candles, especially below the 50 moving average, they have further downside. So that's kind of my premise. That's kind of how I'm thinking about the market, that there should be further downside here based on the price action so far. And if I'm proven wrong and the market stalls and turns, and if there are, I don't know, because listen, the Secretary of Treasury can come tomorrow and say something. Trump could say something. The Fed could say something. You never know in terms of liquidity. Not that the decline is so large that they would feel the need to step in any way and just assure the markets that everything is fine. But there, at any time this could happen, and if then if you get some kind of a heavy buying tomorrow, like a big piercing candle on high volume based on some kind of a news event, then we got to listen to that. Usually, if the market is heavy, those types of moves don't last a long time, and the market will retest the lows to see if it's really a true buying or if it's just short covering or what have you. But all this type of kind of reading the price action, it does comes with experience just by watching markets, over time. But you just have to listen to what's going on. And for right now, the market is telling you we don't like the upside, and the market, it's moving from a place of, like, I'm giving you money to the place where I'm taking away from you money. And that's, especially on the long side, it's very hard to do anything. And yes, there are sectors like maybe steel energy and maybe healthcare that have been kind of breaking from the market trend, and they outperform a little bit in here. But it doesn't matter if you're going to have declines. All correlations go to one, and it's not going to matter. So hopefully we're not getting into something too extreme in here. It's probably just going to be like a garden variety correction. We're looking at it as a fourth wave, more of a choppy type decline until we are finishing, in my view, kind of a fourth wave decline. If this was a one and a two, and we've completed a three, then we're looking at this moving here, some kind of a fourth wave. The larger it gets, though, the more problematic it will be, and I will switch my thinking from looking at this as a fourth wave to looking at this decline as a second wave. And then the most obvious targets will be the highs back here, which is towards 6200. So those are pretty deep there's still what, another maybe 5%, 6% to go. I think if I measured correctly from the highs to these lows in here, you're getting a decline of about 11%. So yeah, if you've declined about 6 and this is 11 and a half, so almost we're almost kind of halfway there in terms of a decline, if that's what they're targeting, and that's where you have a rising 200 day moving average. It's right there at about 61.53. I think that's what it is, right? This is because this in my chart this is the 52 week, so it's 61.50, and then if I go on the daily, yeah, it's about 6200 where that would kind of fall in place. So by the time, it's probably going to be at about the same level as these highs are. That's probably where you're going to get a cluster of this moving average with some kind of a declining prices. If we're going, probably going to go up a little bit and then maybe do some kind of a larger ABC like that. We'll see. But that's kind of where my thinking is. Until proven otherwise. So thanks for watching. As always, be careful out there, and I'll talk to you later. Bye bye.